How y'all doing, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. Also, if you want to follow me on Instagram, you can find me at Instagram, Richard Fain, Millionaire Mentor. That's my new Instagram page. If you guys remember, I had the Richard Fain 28 page. We had over 90,000 followers on Instagram, and Instagram shut my page down. They disabled it. And I believe they disabled it because there were a lot of impersonating scammers on Instagram. So be careful. If you want to follow me on this new page, you certainly can. My new page on Instagram is Richard Fain, Millionaire Mentor. Do me a favor. If you want to follow me, you want to see my daily reels that I put up talking about financial freedom, then go follow me on Instagram at Richard Fain, Millionaire Mentor. All I can tell you though, guys, is you need to be careful. A lot of impersonating scammers over there. So just make sure if you follow me on Instagram, you're following the real Richard Fain. And the way you know you're following the real Richard Fain is I'm never going to slide into your DMs and try and get you to send me money. The fake Richard Fains on Instagram, the fake Richard Fains on Facebook, the fake Richard Fains on Twitter, the fake Richard Fains on TikTok are gonna all try and slide into your DMs and ask you to send them money to invest for you. The real Richard Fain will never do that because I don't invest money for anybody but myself. So if you want to follow me on any of those social media platforms, feel free because I post on each one of them periodically. But my main one is going to be Facebook and it's going to be Instagram. And it's Richard Fain, Millionaire Mentor. All spelled correctly, no added letters, no missing letters, no numbers attached, no underscores, just all one concise word, Richard Fain, Millionaire Mentor. So if you want to follow me on Instagram, feel free to do that. If you want to follow me on Facebook, feel free to do that because I do post on those two platforms and TikTok. I do some little reels for TikTok as well. So check me out on all those social media platforms. But you guys know the main way you can get at your boy is through this YouTube channel because I'm here every single day dropping some type of content, whether it be the live stream that turns into a video, and then obviously I do other edited videos throughout the day as well. So if you want to rock with your boy, go ahead and rock with him. I appreciate you. I appreciate y'all coming back day in and day out to support your boy, but better yet, getting yourself some financial nuggets to get you to your financial freedom, right? If you want up to 15 free stocks, Moo is going to give you up to 15 free stocks when you try out their Moo brokerage app. They're going to give you up to 15 free stocks. When you put $100 in that brokerage account, they're going to give you 5 free stocks. When you put $1,000 in your Moo brokerage account, they're going to give you 15 free stocks. Now, guys, this is a limited time offer. So don't delay, act today. Go down to the description box, click on that Moo link, open up your new Moo account today. Go get that free stock, go get that free money. You guys know I'm going to be using the Moo brokerage app or my Moo brokerage account to buy 3 big boy blue chip paper assets that I believe give me an opportunity to double my net worth over the next 10 years. Right? I'm going to double my net worth over the next 10 years. At least that's what I believe. Using these 3 big boy blue chip paper assets that I'm going to be buying using my Moo account. Like I said, if you want to rock with me and copy my plan, number one thing is get down in the description box, open up your Moo account, put you some money in it. The second thing you want to do is you want to send me an email and say, hey, Richard, I opened my Moo account. I put money in my Moo account. Please send me your wealth transfer blueprint video that outlines those 3 big boy blue chip paper assets you're going to be buying over the next 10 years to double your net worth. I want to take a look at that plan. I may want to copy that plan, and I'll send you that video. Take it one step further. For some of you folks that are brand spanking new at investing and you're not real comfortable with the brokerage apps, if you open your Moo account, you put money in it, and you send me an email and say, hey, Richard, I funded it, I will send you a Moo tutorial video that I did to walk you through the basic steps of being able to buy and sell paper assets on the Moo account. I also went into detail on how to use the app to get access to the in-app tutorials that can walk you through options trading, stock trading, whatever you want to do, you can do it on that app. That tutorial will walk you through how to find it. It's a basic tutorial. It's about 17 minutes, but it's full of good, useful information for someone that's brand new. They don't really know how to use these brokerage apps, and they decided, you know something, I'm going to take control of my financial destiny, and I'm going to start building wealth in 2024, but I need to learn how to do it. I'm giving you the step-by-steps, guys. Not only am I introducing you to a great brokerage app like Moo that I use every day, I'm also giving you my blueprint, my wealth transfer blueprint. I'm giving you that too, telling you exactly what I'm doing. Now, I'm not your financial advisor. I'm no CPA. I'm no CFP. No, I'm none of that stuff. I'm not giving you financial advice. I'm just telling you, if you want to know what I'm doing and you want to copy that, you're more than welcome to. But you got to get the video that outlines the 3 big boy blue chip assets. And then I'm going to send you a video to show you how to use the Moo app. I mean, come on, man. Right here, I'm giving it to you. I'm putting it on a silver platter and giving it to you. Now, you still got to take action. I can't invest for you. You got to do that on your own. You got to discipline yourself. You got to stay consistent, and you got to be patient. I got a 10-year window. I'm going to be rocking with this plan for 10 years, guys. I'm 56 years old, guys. I'm going to be doing this till I'm 66, guys. So there is no excuses. If you want to build wealth, take the bull by the horns, wrestle it to the ground, and win. That's all you got to do. You got to take action. I told you guys yesterday, and I'm going to tell you every day, if you want different activities, right? If you want different results, you have to do different activities. This might be one of those activities you need to do. You may need to get your brokerage account. You may need to get my wealth transfer blueprint plan. You may need to get that tutorial to learn how to use the brokerage app so that you can take control of your own financial destiny. Stop letting somebody else control it. You take control of it. You learn how to use these different things, these different investments, these different ways how to invest to build your wealth. That's what I'm telling you guys. Do what you want to do because it's your financial life. But I'm telling you, if you want to change something in your life, change it. You can do that. If you want to change something in your life, change it. It's simple as that. If you want to change something in your life, change it. That's all I'm going to tell you. Now, we got a lot to unpack, a lot to cover today. We're going to talk about inflation, right? We got to talk about inflation. We're going to also talk about these there's several major banks, guys, that are they're calling for a collapse in the market. And we're going to talk about that. We're going to read an article by Wells Fargo where they're putting a warning sign out there. They're saying, hey guys, be prepared. This might happen. So we're going to talk about that. We're going to also talk about the housing market, because I'm starting to see a shift here. Remember, for a long time, we've been in a seller's market. I think it's shifting to a buyer's market, and I'm going to tell you why. We're going to read some information that I'm going to walk you through that may support no more seller's market right now. It's a buyer's market. Even though we don't have a lot of demand, the demand that we do have is a pretty powerful demand, right? We don't have a lot of it, but what we do have is starting to shift the market from a seller's market to a buyer's market. We're going to talk about that. We're going to also talk about stocks. We had a 3-day rally until we hit the wall, right? We got that inflation report for February. And then Thursday, the market pulled back. We're going to talk a little bit about why the market pulled back and what we can expect going forward as investors, as traditional investors who buy paper assets to build wealth. We want to know this. So pay attention, stick around, hang in there, be patient. See, what I'm asking you guys to do, you have to exercise some patience, guys. We got to get out of this mentality that we're here for 30 seconds and then we got to go on to the next 30-second video and then we keep. No, pay attention. If you want to build wealth, stick around. I'm going to be dropping some good nuggets for you if you want to build wealth. Now, if you're here to just get entertained, then you're probably at the wrong channel. Not a lot of entertainment, a lot of education on this channel, not a whole bunch of entertainment. I ain't going to be talking about people. I ain't going to be calling people out their name. I ain't going to be doing any of that on here. So if you're here for the entertainment and you think I'm finna go off on somebody, you're in the wrong channel. I'm just giving you the notice. If you're here for entertainment, you found the wrong channel. If you're here for education and build your wealth and understand what's going on in our financial markets and how to prepare yourself and how to win anyways, no matter if it's good times or bad times, you still win, stick around. And then I'm going to give you your daily dose of crypto. Yep, y'all know I got to give you your daily dose of crypto. And the reason I'm giving it to you today is because these crypto whales, they're starting to turn, they're starting to divest, they're starting to dump. We're going to talk about it. I'm going to take you through some information here. I tried to tell y'all a week ago. I tried to tell y'all it was coming. Some of y'all didn't believe me, but I'm going to give you proof that is starting to happen. Just stick around. That'll be our last topic we're going to hit in that daily dose of crypto. And I know that's going to trigger some of you guys, but that's okay. So let's start off with what's going on with these major banks calling for some type of catastrophic collapse. Now, a few days ago, what did we get? We got the February CPI inflation report. 2 months in a row, inflation is sticky. It's really, really resilient and it's sticky and it's starting to creep up slightly. Not a lot, but slightly over the last 2 months, January and February. Now, like I told you, and we'll talk about stocks in a minute, but the market fell off a little bit on Thursday after we got that report on Tuesday, right? Also, you got to remember next week, what's happening next week? Somebody tell me what's happening next week in the chat. What do we got to be paying attention to next week? What's really very important for us as investors that what we got to pay attention to and be ready for next week? Anybody in the chat can help me out with that. There you go. I have one person popped up in the chat. 2 people popped up. 3 people popped up. Yes, the Federal Reserve will be meeting next week, guys. So you got to be ready for that. That's information that you really are going to want to pay attention to. As investors, guys, we got to know what the Fed is going to do. Are they going to increase short-term interest rates? Are they going to decrease short-term interest rates? Or are they going to leave the short-term interest rate alone? We'll know next week. So tune into that. Pay attention, right? Pay attention, guys. The key here is we have to have some general knowledge of what's going on in the marketplace if we're going to be effective investors, right? So let's get started with these big banks. And let's talk a little bit about Wells Fargo. So Wells Fargo pushes back Fed rate cut expectation to June from May. So what is Wells Fargo worried about? Why are they pushing it back from May to June? Let's find out. Let's read a little bit and see what Wells Fargo has to say. Wells Fargo on Wednesday joined major banks such as Morgan Stanley, Goldman Sachs, and UBS Wealth Management in forecasting the first rate cut from the U.S. Federal Reserve in June. Wells Fargo, which had previously expected the cut in May, said the Federal Open Market Committee, FOMC, continues to seek greater confidence that inflation is headed back to the Fed's 2% target before announcing a rate cut. There you go. So as we talked about earlier this week, the Fed is not going to do anything with rates, guys, until they're absolutely 100% confident that inflation is not going to go back up. They're still in a tightening phase. They're not in an ease phase yet. They're still in a tightening phase. What that means is they're going to keep rates higher for longer to force inflation down or keep it down. These last two CPI inflation reports we've gotten, January and February, has not helped any. It has not helped. Inflation month over month, year over year has increased slightly. The Fed knows that. That's why Wells Fargo and some of these other major banks are coming on record saying, pump your brakes, guys. Look at here, market. We ain't getting no rate cuts until June. Let's keep reading, though. Let's see exactly what else Wells Fargo has to say. Last week, Fed Chair Jerome Powell said the U.S. Central Bank was not far from gaining the confidence it needs to dial back the level of policy restriction. All that fancy means is they're not ready to dial back interest rates. All this fancy talk, all this jargon, policy restrictions, that only means they ain't ready to reduce short-term interest rates, but has been reluctant to declare an end to the inflation battle. And all that means is the Fed ain't ready to say, okay, we've beat it. They're not ready to say that yet, guys. And again, remember, we talked about soft landing, bumpy landing, hard landing. A month ago, everybody thought it would be a soft landing where everything would be peachy keen, right? They'd reduce interest rates, market would go to the moon, everybody get rich. That's what everybody thought a month or two ago. Now, all of a sudden, we done got these two last CPI inflation reports, and inflation is being sticky, starting to slightly move upward. People are saying, oh, golly, no soft landing. Maybe a bumpy landing. Maybe a bumpy landing. And that's exactly what the Fed is just saying. Hold your horses, buckle up in your seatbelt. Might be a bumpy landing. Let's keep reading. But a report from the U.S. Labor Department on Tuesday showed a solid increase in February consumer prices and higher costs for gasoline and shelter, suggesting some stickiness in inflation. See, I just used that word a couple minutes ago. Remember I said sticky? Inflation is sticky. Remember we talked about on Tuesday about what caused the little bump in increase in inflation? Remember I told y'all gas? 3.8% increase month over month in gas prices. And a lot of y'all were in the chat saying, yeah, I can feel it because I'm going to the pump and my gas more expensive. Remember I told y'all I went to the pump 3-4 weeks ago. I could get premium unleaded 350, 360. Now it's 415. I'm telling you, inflation is being sticky. Remember, we talked about shelter. And remember, shelter is not your mortgage payment. Shelter is rent, what people are paying in rent. Rent went up. Shelter costs went up, right? Gasoline costs went up. Stickiness is not good, guys, when we're trying to get the Fed to reduce interest rates. Despite the second straight month of firmer inflation readings, basically that's a fancy word for 2 months of inflation going back up, the composition of the report remained consistent with a deflationary trend. And all that means is, even with the slight bump, the trend is still showing inflation coming down. Because when you look at inflation over the last 24 months, where have we come from? We came from a 9.1% inflation rate in June of 2022. Less than 2 years later, we're down to 3.1 or 3.2, I believe, 3.2. That's headline inflation. So we've made a lot of progress. The Fed has jacked rates up for 24 straight months. This would be the 24th month right now. Remember, they started increasing short-term interest rates in what? March of 2022. So this is the 24th month that they've been tightening. When are they going to ease? That's the question. When are they going to ease? Well, Wells Fargo and several other big boy banks believe they're going to do it in June. But let's keep reading. Let's see what it says. Despite the second straight month in firmer inflation, we read that, we are building evidence that the labor market is cooling and inflation is still slowing on trend, economists at Wells Fargo said in a note. We are building evidence that the labor market is cooling. How do we know that? How do we know the labor market is cooling? Remember those jobs reports we got in January and February? Remember in January, the economy added 290,000 jobs. That was January. Unemployment was 3.7%. What happened in February, guys? What happened in February? We only added 275, and that's probably going to be less once they go ahead and adjust it. But the report came out 275, which is down from the 290. But the more important number we need to pay attention to is unemployment increased to 3.9% from 3.7. That's cooling, guys. That means the labor market is cooling off. It's not as red hot. And that's what Wells Fargo is saying here. Now let's move on and see what else we got in here before we finish up with this report from Wells Fargo. The brokerage expects 100 basis points cut this year and another 100 basis points in 2025, which would bring the federal funds target range to 3.25 to 3.50 by the end of 2025. That's what Wells Fargo is expecting, guys. What do y'all think? Do you believe that? They're calling for a 2% decrease in the Fed funds rate by 2025. They're saying we're going to get 100 basis points this year decrease. Who believes that? I don't know if we'll get 100. I think I believe 75. I don't know if we'll get 100. But if we get 100, what does that mean for us as investors? Remember, we talked about when interest rates go down, what goes up? What goes up, guys, when interest rates go down? What goes up when interest rates go down? What goes up? Assets. Assets go up. When interest rates go down, assets go up. So if I'm an investor, why is that information important? Because I need to know what the forecast is when it comes to interest rates. If I know what the forecast is, right? And Wells Fargo is giving me their forecast. They're saying we believe the Fed will reduce interest rates by 100 basis points in 2024, starting in June. So if I'm buying paper assets right now, guys, I should be buying my tail off. Knowing that if I can get the Fed funds rate down by 100 basis points, that means the stock market gonna go up. So guess what that tells me? All of these assets I've been buying, right? All of this year, if I've been buying since January, like I've been recommending you guys do, if you've been buying since January, you will have 6 months of buying assets at a discount, because once the Fed start reducing short-term interest rates, my opinion is that the stock market goes up. So all of these assets that you're buying right now should be more valuable by the end of the year. Rates go down, stock market goes up. Why is that? Because the stock market is made up of companies. Plain and simple, guys. The stock market is made up of companies. And anytime companies can borrow money cheap, matter of fact, anytime consumers, you and I, can borrow money cheap, what do? We go borrow it. So when rates come down, that means assets have the ability to be purchased by more people. So what does that do to assets when you have more demand for them? Price goes up. When there's more demand for assets, the price goes up. When more people and more businesses have access to cheap money, what do? They go borrow that cheap money, and then they go buy assets. Well, at least some of us. Some of us go spend it to make the 1% more wealthier, but some of us do what when we can borrow that cheap money? A guy like me, if I can go get a mortgage for 3%, and I can turn around and get a cash-on-cash return on that rental property that I use that mortgage to buy, that loan to buy, I can get a 10%, and I'm only paying 3%. You ain't got to be a rocket scientist. I'm making money. And a lot of other people know that. Businesses know that. So anytime money gets cheaper, assets get more in demand. And when anything's in more demand and you have a limited supply, what happens? Prices go up. That's why I'm telling you guys, you got to follow this stuff. You got to know what the Fed is doing. You got to know what they may do. And Wells Fargo, one of the four horsemen, one of the big boy, too big to fail, Goldman Sachs, UBS Wealth Management, all of these people are saying the Fed going to reduce rates. So you better be buying and being prepared and getting ready to go on this 10-year run. It's going to be a 10-year run, guys, where it's going to be a lot of millionaires made. The question is, are you going to be one of them? Now, let's move on. Let's move on to the housing market. Let's talk a little bit about what's happening. Remember, guys, paper assets, in my opinion right now, is my favorite asset to buy. There are no real roadblocks in the way from me buying paper assets. I just need $100. I need $50. I need $150. I need $200. Whatever I got, I can buy paper assets. Real estate is another asset class that I've used over the last 25 years to build wealth, but it's been a little bit out of range because of interest rates. We're going to read some information here that may change that. Remember, Fed getting ready to reduce interest rates. So what is that going to do to the 30-year fixed rate mortgage rate at some point? It got to come down. Why? Because the Fed funds rate is tied into what? The 10-year treasury rate. And the 10-year treasury rate does what? It competes with the 30-year fixed rate mortgage rate for the same investors. Right? It does. It does. So if the Fed funds rate comes down and the 10-year treasury comes down, the 30-year fixed rate mortgage rate has to come down. There's no other choice, right? It has to. It has to at some point. So position ourselves to be able to add another asset class to our war chest. Remember, we're building this war chest. This war chest we're going to be building for the next 10 years. We're going to be transferring wealth to ourselves over the next 10 years. We need to build our war chest. We already got paper assets in the war chest. Let's add real estate, but let's figure out what's going on with real estate. Let's talk about Redfin. and what Redfin is saying is happening right now in the market. The housing market update. This is from Redfin. Supply ticked up in February for the first time in 8 months. So supply is starting to move up, guys. When supply moves up, what happens? What happens? When the supply comes online, prices have to come down a little bit, right? You'll see what I'm talking about. Let's read a little bit. New listings rose 13% from a year earlier nationwide during the 4 weeks ending March 3rd. The biggest increase in nearly 3 years. So new listings, more inventory, more supply coming on the market. Biggest jump in nearly 3 years, guys, right? The boost in new listings helped bring the total number of homes for sale up 1.7%. Why is that important? The more homes on the market, people got to bring down the price. Why do you got to bring down the price? Because people got more to choose from. You can keep your price up there sky high if you want to. You got to bring that price down if you want to be competitive. When more supply comes on the market, guys, sellers have to bring down their realistic expectation for what they can sell their house for. Because if I got 3 houses in my neighborhood and I'm up here trying out like I'm some, I'm going to keep my price high. I'm worth it. Okay. Somebody going to go buy them other 2. And you're going to still be sit there with your house up here thinking it's worth it. And somebody going to buy them other ones. That's why supply is so important to bring down prices. Supply is starting to move according to what Redfin is saying, right? Following 8 months of declines, February is the first month the number of homes for sale has increased on an annual basis. It's starting to happen, guys. It's starting to happen. All we need now is the Fed to start bringing down them interest rates and woo, we can go buy some real estate at reasonable prices and at some point with a reasonable mortgage loan rate, right? Let's keep reading. This week's pricing data also brings a few glimmers of hope for house hunters. Asking prices of new listings posted their smallest increase in roughly 2 months. Additionally, 5.5% of home sellers dropped their asking price. Well, Richard, how do you know that? Because I'm a home seller and I dropped my asking price. That's how I know. See, I'm giving y'all firsthand information. I got a house for sale. Not the dream home, but my old home. And I dropped my price. Why? More inventory is starting to come on the market. In the community that I have that house in, more inventory is starting to hit the market. It's going to be more competitive for sellers now. None of this crap, well, I'm the only one available, so take my price or kick sand. Can't do that no more. Not according to what Redfin is saying here. Additionally, check this one out. Additionally, 5.5% of home sellers dropped their asking price on average, the highest share of any February since at least 2015. High mortgage rates pushed the median monthly housing payment to $26.94. Woo! Y'all didn't hear that. High mortgage rates pushed the median monthly housing payment to $2,694, almost $2,700 across the United States is the average monthly mortgage payment. That's a big old gigantic monthly mortgage payment. This week, just $23 shy of the all-time high. But final sales prices, which rose 5.3% year over year, one of the biggest increases in the year and a half, should start declining soon as price growth for new listings loses some momentum. So they're saying prices should start coming down as more inventory hits the market, guys. House hunters are looking at homes and applying for mortgages as we approach spring. See, spring is typically a big time for people to start buying houses, right? Touring activity is up 23% for the start of the year. compared to 14% increase during the same period last year. Mortgage purchase applications are up 11% week over week. I did a video a couple weeks ago, maybe 3 weeks ago, about mortgage loan applications were declining. Now they're up week over week by 11%. What's happening? All of a sudden, you got mortgage applications up. You got more properties hitting the market for sale. So that means prices should come down at some point. They have to. More supply. We still don't have a whole bunch of demand. Why? Because mortgage rates are still 7%. So we get more supply. We got limited demand. What does that mean, guys, for prices? They have to come down. When you have more supply of something and you don't have enough demand to meet that supply, prices come down. That's what they're telling you here. That early stage buying activity hasn't yet translated to a boost in sales, with pending sales down 6% year over year. So what they're telling you is activity is starting to pick up. More homes are starting to hit the market. More people are actively out looking to buy a home. They're saying that increased by 23% since the start of this year. More people are out trying to look at homes. They're telling you mortgage applications over the last week have increased by 11%. But they're saying that still hasn't translated into sold homes. Again, that goes back to what? Interest rates. See, a lot of people can be out here kicking the tires and rolling down the windows and critiquing the house. And, oh, golly, I don't like the paint color. Oh, golly, I don't like the flooring choice. That kind of crap. They can do that because why? They ain't going to buy nothing no way because interest rate's still too high. But they're out kicking tires, rolling down windows, going through the motion, acting like they going to buy something, but they ain't finna buy nothing until what? Them interest rates come down. When them interest rates come down, guys, let me tell you, all hell gonna break loose in the housing market. I'm just telling you. Right now, this activity, this 23% uptick in activity is just tire kickers. I know, guys, I'm in the market to sell a house. I've had 30 people come through look at my house, all tire kickers. All tire kickers. They're part of this 23% increase in people out looking at house. That's all they doing is looking. They ain't buying nothing. They're going to start buying when interest rates come down. Right now, they're just out taking a nice window shopping. You know how it is when you go out to the mall, sometimes you're dead broke. You ain't really got no money, but you take your family out there just as an outing. We're going to go window shopping just to, give us something to do. That's what these people are doing. They ain't finna buy nothing. That's why sales are still down 6% year over year. They ain't buying nothing. They're just out kicking tires. But it's still a good sign. It's still a good sign that activity, at least, is picking up. There have been two major obstacles for home buyers over the last year: low inventory and high housing cost. Low inventory, not a lot of inventory. And then, of course, the prices of the inventory that was out there was skyrocketed high. Low inventory and high housing costs, said Redfin economic research lead Chen Zio, whatever his name is. Now, the first barrier is starting to come down as more supply comes on the market. Housing costs are still high, but they're likely to come down a bit as mortgage rates gradually decline through the year and price growth loses some steam. That's true. So what he's saying is the Fed gonna reduce short-term interest rates sometime this year, and mortgage rates will follow. They won't be simultaneous, they lag. So if the Fed reduce interest rates, let's say by a full percent this year, then probably going into 2025, you'll see mortgage rates come down by 1%. So if mortgage rates right now today are, let's say 7%, Fed start reducing rates, say they reduce it by a full 1%, then in 2025, you're gonna see mortgage rates around 6%, high 5%, 6% range. That's the way it's gonna work, guys. That is the way it's gonna work. And that's what these guys here at Redfin are basically saying. They're saying mortgage rates gradually decline through the year and price growth loses some steam. Why does price growth? And all they mean there is home prices. Why will home prices lose steam? Because more supply is coming on the market. And I've already told you, it's supply and demand. The more supply you have with not a lot of demand, prices have to come down. And that's all these people here at Redfin are saying. Buyers who can afford today's mortgage rates may have a better luck finding a home now than they have in the past several months. And that is so true, guys. Back to my house that I'm selling. These people are not lying here at Redfin. They're not lying. See, there are people out there who can actually pay cash for their house. They call it 1%. There are 1%ers out there that can pay cash. They don't need to get no mortgage. Or they say, well, I don't care if I get a 7% mortgage. I'm rich. I'm wealthy. I can afford that. Who cares? I just want the lifestyle. I don't mind a 7% rate. It's a drop in the water for me. I got assets that produce more than enough income to live my life. Yes, I'll go ahead and move forward with the loan. Or yes, I'll just pay cash. See, there are people out there like that. Those people right now are the buyers who are shifting this from a seller's market to a buyer's market. Those buyers right there. And I am telling you, they're out there. Those buyers who have money to pay cash, or they don't mind the 7% interest rate. They can absorb that in their budget and it not bother them. They can go out and go shopping right now. They can get any house they want and get it at a really good price. Why? Because sellers are starting to feel seller fatigue. I'm one of them. I done had my house on the market for almost 120 days. A lot of activity, but ain't sold it. That starts to wear at you. That's called seller fatigue. And I gotta be honest, if someone came in and said, look, I'm gonna give you this price for it, and it's reasonable, I'd sell it to them. I would. That's what a lot of other sellers are starting to feel. That's why I'm telling you guys, it's starting to shift from a seller's market to a buyer's market, but select buyers. Buyers who have the financial strength to absorb a 7% interest rate on their monthly payment, or they got cash. And that's what these guys here at Redfin are saying. Buyers who can afford today's mortgage rates may have a better luck finding a home now than they have in the past several months. And they also may be less likely to face competition because inventory is improving. See, I'm just giving y'all exactly what these people are saying. I'm seeing it firsthand. So all that means, guys, is if you are someone who is looking to add real estate to your war chest, to your wealth building war chest, and you can afford it, listen, it ain't a bad opportunity to go shopping right now, because you're going to be able to strike a better deal with these sellers right now. They're going to take money off. I'm one of them. I know what I believe my house is worth. I know what the market says it's worth, but I'm willing to take less. I'm willing to take less. There are many sellers like me out there that are willing to take less than what the market says the house worth to move it. So if there are serious buyers out there who have cash and can absorb these high interest rates, and they're looking for good deals where they can get the house below market price, go shopping, guys. If you're one of those people, go shopping. I live in Florida, by the way. Whoever just popped in here, not in Florida. That's a damn lie. I live in Florida. Yeah. Not in Florida. It's not happening in Florida. Yeah, it is. Yeah, it is. I live in Florida. I live in Southwest Florida. It is happening. I don't care where you live. Sellers get fatigued. People want to sell that house and move on with their life. They get fatigued. They will sell it. It is a buyer's market right now for buyers who can afford it, though. Not for your everyday Joe Blow borrower who can't afford the 7%. It ain't for them. But for people out there that got the money and can absorb a 7% interest rate on their monthly mortgage payment, they can go demand what. I don't care if you got it listed for $800,000. I'll give you $725,000. You think people ain't gonna take that? Oh, they gonna take it. I don't care if the market says it's worth $800,000. They will take it. Why? Because the only option is guess what's gonna happen though? As more inventory comes on the market, their price is gonna fall anyways naturally. It's gonna have to. As more inventory comes on the market for these people like me, my price of my house is going to drop. And they're telling you at Redfin it's happening. I've just gave you the data. If you don't believe me, go out on Redfin's website and read the article yourself. It's happening, but it's an opportunity for an investor. If you're an investor who says, you know something, Richard, I'm ready to start buying real estate and putting that in my war chest. I want to buy real estate for income and put that in my war chest. Then do it. I would do it. I would go get it right now if I got the cash, because I can always refinance. If I got the cash and I could absorb a 7% interest rate for now, 2 years from now, I'll just refinance and get a better rate, right? So that's what I would be doing if I were you guys and you wanted to add real estate to your war chest. I think it's a buyer's market now for the right buyer, though. Not for people who can't afford the 7% interest rate. It ain't your market yet. Your market is coming in a couple of years. Right now, it's only a buyer's market for the people who have assets and can afford to pay cash, or those people who can afford to absorb that 7% mortgage rate. If you can do that, you can go get you some good bargains out there, guys, and duplexes, quads, tries, single families, go get them. Well, that's our daily dose of the real estate market and where I think it's happened. I just read you what Redfin said, and I couldn't have said it more perfectly. They hit the nail right on the head. I'm experiencing that right now in my real estate life. These guys know what they're talking about. I got to do more stuff on Redfin because they hit it right out of the park. They know exactly what they talk about. But let's dive into stocks. Let's talk about stocks for a little bit. And I want to read y'all something here about stocks. It says the Dow closes more than 100 points lower, snaps 3-day win streak after hot inflation report. Let's talk about that. So the Dow fell Thursday and snapped a 3-day win streak after the release of the hotter than expected CPI inflation report. Treasury yields went higher. So again, Treasury yields and the stock market compete for the same investors. Treasury yields, U.S. Treasury bonds, and the stock market compete for the same investor, right? So when inflation report came out in a few days ago for February, that sent the Dow, which is part of the stock market, is one of the major indexes in the stock market. It sent the Dow down 100 points. What do yields do for Treasury yields or Treasury bonds? They go up. So what that tells you is people were taking their money out of the stock market and they were putting their money in Treasury bonds. That's why the yields were going up. Why? The yields were going up because it was red hot. You had more people wanting to get into it, so it runs up the price. Same thing, guys, supply versus demand. If there are more people that want to buy Treasury bonds than there are available, then prices go up on the existing inventory. That's what happens. So when people were taking their money out of the stock market because they weren't happy with the inflation report and they started putting them in Treasury bonds, they go up. That's the relationship, right? They compete for the same investor. Let's keep moving here. While NVIDIA shares were under pressure, so you guys notice NVIDIA fell off a little bit. Right? I believe it was either Wednesday or Thursday, they fell off a little bit. NVIDIA did. Now, NVIDIA has been red hot, but they fell off a little bit. The 30 stock Dow pulled back 137.66% or 0.35% to close at 38,905.66. The NASDAQ, which is another one of the major indexes, the NASDAQ composite fell 0.3%. to 16,128.53, while the S&P 500, which is, y'all know, that's one of my big boy blue chip assets that I'm buying, is an S&P 500 ETF, which tracks the S&P 500 index. It slipped by 0.29% to finish the session at 5,150.48. So all three major indexes fell because of that news. And why did it fall, guys? See, investors like certainty. They like certainty. They like to be able to look down that road and see exactly what's coming. When they don't look down that road and see exactly what's coming, they get afraid. And when they get afraid, what do? They go to U.S. Treasury bonds, or they try to find safety until they can see clear down the road. See, if I'm looking down that road and it's crystal clear and I can see exactly what's coming, it makes me feel a lot better. It makes me be okay with going down that road. But if I look down that road and it's foggy and it's really low visibility and I can't really see what's coming, I don't want to go down that road. And that's what's happening to the three major indexes in the last day or so. Investors don't see a clear path. And when they can't see a clear path, they don't go down that path. When they can see a clear path, they go down the path. Right now, couldn't see it, right? Couldn't see it. So let's keep reading here. Economists polled the Dow Jones, expected a 0.3% gain for headline, and then PPI, which is producer price index. I almost got that wrong. Producer price index at 0.2 increase for the core reading. Stocks were initially resilient following the report, but lost steam shortly after the open. And again, guys, that's just, they didn't like the report. If they don't like the report, I told you what's going to happen. If it ain't no clarity, if they can't see down that road and see what's coming, they go in the other direction. And that's what investors did. And that's why the market fell off a little bit. But that's an opportunity for you and I, though. Remember, I just talked about, we're in this thing for 10 years. Every day I can buy these big boy blue chip assets at a discount, I win. So anytime I can buy them in the red, I win, guys, because I got 10 years before I need them to really be in the green. My goal is to buy them in the red as many days I can buy them in the red. But when I get to my 10 years, then I need them in the green. See, buy low, sell high. That's my goal. I don't know what your goal is investing, but my goal is I don't mind them trading in the red so I can buy more. Remember, I told y'all I was doing this every single day. I was taking like $100 to $300 a day. Every day the market is open. I'm buying SPLG and FTEC every day. And I'm thinking if I can average $200 a day for 200 days a year, let's say the market is open 200 days a year, and I can average $200 a day that I invest in both of these big boy blue chip ETFs. That's $40,000 a year. I do that for the next 10 years at an 8% rate of return. That's over $650,000, guys. And that's just part of the nest egg. That's just part of what I plan on making. That's not even my primary way of investing. My primary way of investing is every single month through dollar cost averaging. A larger amount of money, a much more larger amount of money is going every single month. Secondary way I'm investing is what I just told you, where I'm taking $200, between $100 to $300 or average of $200 a day, and I'm just putting it in those two ETFs that I just gave you. And I believe over the next 10 years, by me doing that, guess what? I'm going to go ahead and probably that little piece right there will grow to over $650,000. As long as I get an 8% rate of return and as long as I consistently put the money in there. So for me, even though I read this and I see where the market took a little bit of a step back, that doesn't necessarily bother me because I know what I'm investing in has a historical track record of performance. Now, if you're in this thing for 1 or 2 days and you're trying to get in here and day trade and time the market and all this other goofy stuff, you ain't gonna make no money. You're gonna probably end up losing money. But if you're a guy like me who says, you know something, I only need 3 investments. I don't need nothing else. I need SPLG, which is my S&P 500 ETF. I need FTEC, which is my technology ETF. And then I need the Magnificent 7. That's all I need. See, I don't need nothing else. I don't need to do no options trading. I don't need to do no I don't need to short stock. I don't need to do any of that. I don't want to do any of that. I don't need any of that. All I need is those three. And if I can do that for the next 10 years, I'm gonna double my net worth. 8% rate of return. I'm gonna double my net worth. That's the methodology I'm trying to get you guys to adapt and understand. Here's one for you. Had one of my subscribers, he sent me a text message yesterday. Not a text message, but he sent me a DM on Instagram. And he said, Richard, I sold my Tesla. I took an $18,000 loss. That's what he sent me. He said, I sold my Tesla and I took an $18,000 loss. And the first thing I asked him was, well, why would you sell it? Well, the pressure was on me and they were going down in value and it was going down in value and the pressure was on me, so I sold it. I said, do you believe in Tesla? Yeah, I still believe in them. Then why in the hell would you sell it? Come on, guys. You got to understand what's happening here. See, a guy like me, I'm just buying more Tesla because I know this is temporary for Tesla. It did the same thing in early 23. It did the same thing. Same thing in early 23. Same shenanigans where people starting to short the stock, drive it down. Yeah, people going to make billions of dollars. There's going to be people out there make a lot of money shorting the stock and all that crap. More power to them. All I'm going to do is just keep buying. I'm going to keep buying the dip down. So every day I buy, my cost per share is going to go down. And then what's going to happen is Tesla's going to get out of this slump at some point. They're going to get out of it. And when they do, guess what I'm going to do? I'm going to realize a really, 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 really nice profit. Why? Because I stayed consistent, I stayed patient, and I just disciplined myself. See, this is what these 1%ers want you guys to do, exactly what my subscriber did. They want you to sell when you really should be buying. And that's exactly the trap he fell into yesterday. See, when he really should have been buying, he's selling. He's scared to death and selling. That's what the 1% want y'all to do. They want you to sell when you really should be buying. And they want you to buy when you really should be selling. That's what's happening with crypto. We'll get into that in a second. He just fell into the trap. And I felt bad for him, but what could I say to him other than it's your decision. It's your financial freedom. There wasn't nothing else I could say to him. I just think to myself, golly, man, you should have been buying more. You know Tesla's going to turn this thing around. Y'all know this is just all shenanigans, all manipulation. Come on. Come on. Just thought I'd throw that out. So for some of you people out here who are struggling with seeing your investments in the red, what's your strategy here? What are you really trying to accomplish? Because if you're trying to build wealth, you'll know the red days are the days you build the wealth. So you must not be trying to build wealth. If you're struggling with that, then do what you got to do. But for a guy like me, I love seeing Tesla right now in the red. I told y'all, it get down to $150 a share. And if it do that today, I'm all in a big way. And guess what? If it goes down to 125 the next week, guess what I'm going to do? I'm going to buy some more. If it goes down to 100, guess what I'm going to do? I'm going to buy some more. Because I'm 10 years out here, guys. See, I ain't looking for a quick turnaround. I ain't looking for a quick fix. I ain't looking for a short-term little, I just keep buying it. The lower it goes, the more I buy. Because I know at some point down the road, I don't know if it's a year, 2 years, 5 years, 10 years, somewhere down the road, that thing going to the moon. And I'm going to be on the rocket ship. I told you, got to be in the market every day, man. You got to be on this rocket ship buckled in every day because you never know when it's going to take off. They do not tell you that. He just panicked. Sold everything at the wrong time. Now he's saying, well, should I buy back in? Listen, man, before you do anything, you need to figure out what you're really trying to accomplish. Before you do anything, you need to figure out what you're really trying to accomplish, because clearly what you're trying to accomplish and what your actions are not aligned. If you're trying to build wealth long-term, then your actions are not aligned with that. Not for a company like Tesla. Now, if you were saying some ABC, IPO, ain't nobody never heard of, and it's a pump and dump, I get it. But you're talking about Tesla here, bro. Come on, man. I don't care what you think about Elon Musk. You're talking about Tesla. They're number one in the space. So figure out what you're trying to accomplish is my point. And then also, what do I always tell you guys? Stop trying to be the expert. Why in the world would you have all your money tied up into one thing? Tesla. One stock, 2 stocks, 3 stocks, 5 stocks. Don't do that. That's why I tell y'all 80% of the money I invest goes into ETFs that track indexes and sectors. I don't have to be the expert. When I put my money in the S&P 500, I got 500 companies in there that my money is going into. I don't worry about the total collapse of the S&P. And if it did collapse for a little bit, guess what? I'm going to buy more because I know it's coming back at some point. I don't know if he followed that advice. I don't know how concentrated he was in just 1 or 2 stocks. And that's what happens to you when you only try to be out here to be the expert. Oh, I'm going to buy these 5 stocks and they're going to go to the moon. What if they don't? And all your money tied up into 5 companies. Nope, I want my company tied up into 500 companies, 375 companies. That's where I want my money. I want my money tied up into 3,500 companies. Not just 1 or 2 companies, man. That's why 80% of my money is invested in ETFs. See, I invest in groups of companies, not 1 or 2 companies. The only way I do that is if I'm buying the Magnificent 7, which is 20% of the money that I invest. So keep that in mind, guys. Keep that in mind when you're trying to figure out your strategy and what you're trying to get accomplished. Just keep that in mind, man. Please keep that in mind. Don't concentrate all your money into 1 or 2, 3, 4, 5 little stocks. I don't care who they are. Now, some people might say, well, I'm going to do all my money in the Magnificent 7. Well, go ahead. Ain't nothing wrong with that if that's what you want to do. But if the tech market tanks, then the Magnificent 7 is going to tank. So if I got all my money tied up in the Magnificent 7, I'm concentrated. I'd rather have mine in other industries through the S&P 500 or through like I said, 50% of my money goes to the S&P 500. 50% of the money that I invest. 30% goes to my tech ETF. Now that's concentrated, but guess what? I'm 10 years out, guys. I want it to go down so I can buy more. See, that's why a lot of y'all miss what I'm trying to get you to understand here. The goal is buy low while you're trying to build a wealth. And then when it goes to the moon 10 years from now, that's where the wealth increases. See, y'all think, oh, I'm supposed to buy today and it's supposed to be green for the rest of the 10 years. No, it's not going to be green the rest of the 10 years. It's going to be red, green, red. No, that ain't how it works. It's going to be red. But understand, red is where you build a wealth. Red is when you build a wealth. If you will hold the investment long enough. A lot of us won't hold it long enough, though. We panic. We listen to the 1%, the propaganda machine. Oh, Tesla's being shorted. It's going to go under 100 a share. You better get out right now. That's all propaganda. Guess who's buying it, though? 1% buying it. See, they shorten it, and then they're going to buy it. Once it hits rock bottom, they're going to start buying it so they can get the rebound. They're going to short it right now to drive it down, and then they're going to buy it back on the way back up to get rich twice. And they're going to use y'all both times to do that. and a lot of y'all don't get that. They shorten the stock so they can drive it down. And then they're going to buy it back up on the way back up. But we don't get that sometimes. We get confused. Oh, Jim Cramer said it's not a good bet. Man, Jim Cramer, a 1%er, man. He worked for CNBC. What you think he gonna say? Come on, we'll move on to crypto. Give him a daily dose of crypto, and then we're gonna get out of here. Let's give y'all a daily dose of crypto, and then we're gonna get ourselves on out of here. Now, y'all know how I feel about crypto. So if I'm triggering any of y'all in the chat, this might be the time for you to leave the chat, right? Just leave the chat so you don't have to get triggered and mess up your whole Friday. I don't want to mess up your whole Friday. I don't want to get your little mind all discombobulated on this Friday. So if you're gonna get triggered by my daily dose of crypto, that's why I leave it to the end. That's why I leave it to the end, so I don't trigger some of y'all. Now would be the time to get out the chat. Now would be the time to get out the chat if you're gonna get triggered by my daily dose of crypto. Okay, I warned you. So here we go. Here we go, because I've already warned you. Bitcoin trader, Bitcoin trader sees prices slumping to 60K per coin as crypto bulls / whales see 650 million in liquidations. What does that mean? What does liquidation mean? Can anybody tell me what liquidation means? Please, somebody in the chat, tell me what liquidation means. Because some of y'all ain't gonna get this. But I've been telling y'all what's finna happen. I told y'all this. I tried to tell y'all this. Nobody would listen. Well, some of y'all listen. Some of y'all were hard-headed and didn't listen. But let's read on. Let's read on. Crypto market capitalization dropped 7%, with major tokens like Bitcoin, Ethereum, and others falling sharply in the past 24 hours. Can somebody say start of a dump? Can somebody say, is this the start of the dump? Can somebody help me out here? Is this the start? Is this the dump phase of the pump and dump? Or are we still in the pump? Or are we in the early stages of the rug pull? Somebody help me out here. Are we in the early stages of the rug pull? Are we in the early stages of the dump? Let's read on. The decline was triggered by higher than expected inflation data and profit taking by some traders, with some analysts predicting further losses before a potential rebound. Okay, so they're thinking crypto whales gonna take some profit, all right? And then they're gonna run the price back up again. So maybe a little mini dump, maybe a mini-me dump. Mini-me? You ever seen that Austin Powers with mini-me? Maybe it's a mini-me dump, not the full grown man dump, but a mini-me dump. Maybe. Let's keep reading. Crypto market capitalization dropped by 7% as its sharpest fall this year, as Bitcoin plunged 8% in the past 24 hours to wipe weekly gains and kickstart a market-wide decline. Whoa, guys, that don't sound good. For you crypto bros, that don't sound good. That don't sound good. Bitcoin slumped from Tuesday's high, and I'm talking about yesterday. This is fresh off the press. Yesterday, Bitcoin slumped from Thursday's high of $73,000 a coin to a low of $65,800 nearly early Friday before slightly recovering. Wow. Ethereum, Cardano's ADA, BNB chains, BNB and XRP showed similar losses, while volatile meme coins, Doge and Shiba, fell 13%. See, see, I should have sold. There go my little profit on Shiba Inu and Doge going down the drain. Poof, disappeared. I was in the green. Now I'm certainly to be in the red. I ain't looked at it today, but when I go look at it after this call, I'm sure to be in the red. See what I'm saying? Even I make mistakes. I should have dumped this crap 2 days ago, but I didn't. And now they're 13% down. Great. Solana's SLO coins were the only major token in the green, up 1% since Thursday. The sell-off started during the U.S. trading hours on Thursday as the February Producer Price Index, PPI, came in at 0.6% higher. That means, and all the Producer Price Index is what businesses, companies pay for their raw materials. That's what the PPI is, right? That came in hotter than expected. No different than CPI came in hotter than expected, right? Doubling the pace in January and doubling economists' forecasts. So the economists thought it come in at 0.3%, but it came in hotter than expected at 0.6%. So month over month, what businesses and companies pay for their raw materials went up. That's not good news. That affected crypto, at least what these people are saying. Data shows that crypto tracked futures suffered over 800 million in losses, the second largest figure this year. Longs or bets on higher prices suffered 660 million in liquidations, likely contributing to the sharp downturn. Liquidation occurs when an exchange forcefully closes a trader's leveraged position due to a partial or total loss of the trader's initial margin. Those are all retail people. Those are all retail people that don't know what they're doing. That's all that is. That ain't no whales. That ain't the crypto whales. That's all 99%ers. Got the whole account liquidated. Poof, gone, erased. Better know what you're doing if you're messing around with this crypto stuff. I keep telling y'all, you better know what you're doing on the retail side, messing around with this crypto stuff. Meanwhile, some traders warned of further losses in the coming weeks before an eventual rebound. Now, here's the deal. This is how they trick you. They know loss is coming, but so y'all just don't go crazy and pull everything out. They're telling you there's a rebound coming too. Just hang in there. Diamond hands, hodl, diamond hands. It's coming back, guys. We know it's at $65,800 a coin, but hold on. We know you bought at $69,000 a coin, and now today it's worth $65,000 a coin, but hold on. It's coming back. Next thing you're gonna know, it's gonna be $45,000 a coin, and you're gonna be done lost 25 grand, just like that. Next week, it'll be $45,000 a coin. I'm just telling you, you better know what you're doing. New historical highs are a trigger for selling. No shit. Oh, excuse me. My apologies, guys. No, yeah. No, duh. Exactly. Right? New historical highs are a trigger for selling. Yeah, of course it is. Joker done ran you up to $73,000 a coin. Of course it's time to sell. What do you expect? It's a pump and dump. Gee, Monetti. Man, come on. Some players are taking profits, which raises the question of whether there will be enough hot buyers at current levels or whether the majority will prefer to wait for a deeper correction. Oh, Lord. Now, for those of y'all out there that bought at $73,000 a coin, whoo, man, goodness gracious. Y'all cannot like this right here, what I just read y'all. If you out there done paid $73,000 a coin, I don't care if you bought it through an ETF, if you bought a partial share of it, at the end of the day, it's still equivalent to you buying it at $73,000 per coin. Maybe you didn't buy a whole coin. Maybe you bought a little bit of teeny weeny ETF portion. Maybe you put $1,000 in your ETF at $73,000 a coin. You still on the hook. You still down. Even if you put the $1,000 in at the 73 a coin, you're down. The little $10,000 you put in, it's down. The problem is, I think the dump is starting to happen. I think so. Let me read it again to you. Some players are taking profits, which raises the question. See, did you hear that little bit right there? Did you hear that little bit? Let me read that little bit. Let me rewind, bring it back, and read that one more time. Some players are taking profits. Who are those some players? Somebody in the chat tell me who those some players are. Who are those some players taking profits? Some players. Now, y'all know who I think they are, but who are those some players who are taking profits right now? They done ran this thing up to $73,000 a coin on y'all, and now they taking profits. I thought it was going to go to $150,000 a coin. What happened to that last week? Oh, it's going to $150,000 a coin. Why are they taking profits so early? If it's going to $150,000 a coin, why are some players taking profits early? Now, who's going to take profits early when you know it's going to double from $73,000 a coin to $150,000 a coin very shortly? Who is taking profits early. Some players are taking profits. Which raises the question of whether there will be enough hot buyers. Can somebody tell me pump and dump? How does a Ponzi scheme work? How does a pump and dump work? You need more and more hot buyers. See, you need more and more hot buyers to run up the price. You need more and more people to buy at the all-time high to run up the price. That's what they say. That's what hot buyers mean. For some of you guys ain't catch on to that. Hot buyers mean, do we have any other sucker that's willing to pay us $74,000 a coin? Do we have somebody that's willing to pay us $75,000 a coin? Can we get somebody to pay us $80,000 a coin? That's what hot buyers means. Who can we get to pay more than we paid? Just saying. Some players are taking profits, which raises the question of whether there will be enough hot buyers at current levels. See, $73,000 a share. And guess what the Wells started doing? The Wells said, you know something? Let's go ahead and get some profits. Let's go ahead and dump this thing. Well, let's dump it and get us some profits. And that's what started happening. The problem is when you start dumping this early, it's hard to find hot buyers. Now, this may be the plan though. See, the plan might be this. $73,000 a coin, we've hit a climax. We've hit a glass ceiling. Here's what we do, guys. Let's go ahead and take some profits, run the price back down to 65, but continue to promote the propaganda that is temporary. What we do is we introduce a new hot buyer, right? So we at 73,000, we've hit a glass ceiling. Nobody else will pay this. The market has rejected that price at 73,000 a coin. The market has rejected it. Remember we talked about that a couple days ago when we were talking about stocks, how the market can reject the stock price or accept the stock price. Same thing for this pump and dump crypto stuff. Market can do the same thing. Market can accept the price or they can reject it. The market rejected the $73,000 a coin. So what happens? Wells starts selling. They bring the price back down to 65, 63, whatever it is. Introduce a new price for a new hot buyer. And then they go back at it again. Let's see if we can run it back up again. That's my take. Let's keep reading here. Which raises the question of whether there would be enough hot buyers at current levels or whether the majority would prefer to wait for a deeper correction. Or will people just wait for a deeper correction? Well, that depends on the propaganda. That depends on the Wells and the propaganda, right? If the propaganda says, oh, guys, this is temporary. That's 63,000, man. This is just a bargain. You got to get in. It's a bargain. See, that's the propaganda machine. If they do that, they'll introduce a new hot buyer, right? In a correction scenario, the 65,000 to 65,500 and 60,000 to 60,500 areas are of particular interest as they contain important round levels significant for retail. Oh, who is retail? Who is retail? When they say retail, who are they talking about? Who are they talking about when they say retail, chat? Somebody tell me who they're talking about right there. Who are they talking about, chat? Who is retail? Who are they talking about right here? I can tell you who they're talking about. Talking about you. They talking about you. They talking about the 99%. They talking about you. When they talking about retail, they talking about you. How can we get these retail people to bite? That's what they're talking about. They're talking about you. In a corrective scenario. See, that's just fancy. When they say corrective scenario, that's just a fancy way of saying nobody will buy it at the 73,000 a coin. So we got to find a price where people will get excited about buying this thing again so we can continue to pump and dump. That's all that means. All this corrective scenario is just basically the market rejected it at $73,000 a coin. The market rejected it, right? So now you got to bring it back down to a price where the market will accept it. And then you try it again. You try to run it up again. That's what's happening. Market rejected it at $73,000 a coin. So they're bringing the price down through sell-offs, through taking profits. They reduce the price, reset the price, and see if the market will accept that. And that's what you got happening right here, right? Areas of particular interest as they contain important round levels, significant for retail buyers, and the 76.4% and 61.8% retracement lines, whatever the hell that means. Y'all Bitcoin guys know more about all that. I don't know what that means. I don't know what that means. Let's move on down and see if they got anything else. And that's pretty much the article. That's pretty much it. That's pretty much your daily dose of crypto. I keep telling y'all, I tried to warn y'all. I tried to warn y'all last week, this week. I tried to warn y'all what was going to happen. I tried to warn you. I appreciate the super chat for everybody that gave a super chat, man. I appreciate it. Hey, if you want to give me a super chat, guys, because you appreciate the content, you appreciate the information, go ahead. I appreciate that. I thank you. I thank you for rocking with me. And the super chats, hey man, they help. I appreciate it, right? Y'all know I got this $1 trillion studio, and any little bit of donation will help me keep the lights on in the $1 trillion studio. Y'all know I got the $1 trillion research lab right here. Hey, I got a lot of overhead. My overhead for the $1 trillion studio and the $1 trillion research lab is pretty dang on high. So any donations I can get, guys, are definitely appreciated. If you'll do me a huge favor before we get out of here, and I'm gonna start wrapping this thing up here, I'm gonna tighten it up here, hit the thumbs up for me. Hit the thumbs up for me. Lock it in with a thumbs up if you enjoy and appreciate the content that I'm sharing with you guys. You know, we covered a lot today. You know, we covered a lot. We covered big boy banks calling for some type of collapse because of you know, two months in a row of inflation starting to creep back up. We got 2 months in a row of inflation creeping back up. So some of the big boy banks, they are warning us. Hey, look out. Here's what's happening, right? We still expect the Fed to reduce interest rates, but here's what's happening. So Wells Fargo is calling for rates to be reduced 1% this year. And then Wells Fargo is calling for rates to be reduced 1% in 2025. So when we roll into 2026, if all of that holds up, the Fed funds rate will be about 3.5%, which is fantastic, right? That's fantastic. That means mortgage rates, in my opinion, guys, this is my opinion. If Fed funds rate is 3.5% going into January 2026, then I believe mortgage rates will be under 5% in January of 2026. Because I think mortgage rates will come down 2%, just like the Fed funds rate comes down 2%. Again, don't got no proof of that, but that's just my theory. That's what I feel. So we covered that. We also covered the housing market, where I've told you guys, I believe this is the start of a buyer's market, right? Now, it's not all buyers. It's only buyers who have the wherewithal to pay cash, or they have the wherewithal to be able to absorb a 7% interest rate on their monthly mortgage payment. Those two buyers can go out right now in the best neighborhoods in America and buy the best properties at a discount. They can. Because sellers across the board are starting to get seller fatigue. Plus, as we discussed in the Redfin article, more supply is coming on the market, which forces prices down. More supply, and you don't have any increase in demand because interest rates are too high. You're not going to have a lot of demand until interest rates come down. When interest rates come down, you will have more demand. Right now, interest rates are sky high. Demand has suffered. Now you got supply coming on market, which will force prices down. Remember, everybody was like, well, golly, demand's down, homes are not selling. Why are prices still so high? That's why, because there was no inventory. Now you got more inventory coming on the market, and guess what? Those prices are going to come down. So if you're one of those two buyers, cash buyer, or you're a buyer who actually has the financial wherewithal to absorb that 7% mortgage rate, you're in the catbird seat. You can go out right now and buy pretty much anything you want at a discount. I promise you. You can go out and buy anything you want at a discount. So if you fit one of those two buyer categories, go shopping. Go shopping. Definitely go shopping. And if you're looking for a beautiful home in Southwest Florida, near Fort Myers, Naples, on the Gulf of Mexico, near the Gulf of Mexico, in a gated community, all the amenities, DM your boy. I got one available. It's beautiful. It's about 2,500 square feet. 3 bedroom, 3 bath, full office. Beautiful community. I'm a motivated seller. Keep that in mind. Anybody who is looking for a home down here in Southwest Florida, hit your boy up. I'm a motivated seller. I'm ready to get rid of it. I'm ready to make a deal. So that's our information on the housing market. And then we talked about stocks. We talked about why the stock market cooled off yesterday, right? It cooled off because of the inflation report we got for February. We talked about that. But we also talked about if you're a long-term investor and you're trying to build wealth, we want red days. We want red days. We want a discount. I want a discount on the assets that I'm buying right now. The goal is get as many discount days as I can, but in 10 years, when it's time for me to get out of all of this, that's when I want a premium. I don't need no premium today. I need a premium in 10 years. I need to buy them suckers as cheap as I can buy them until I get to the premium day. I don't want a premium right now. I want a discount. And that's what a lot of us misunderstand about buying assets. I don't need a premium price today. I need a discounted price. I want a premium price 10 years from now. That's when I want my premium. But while I wait till that premium day, all these other days, I want to get rich through red days. And that's what I keep telling you guys. A lot of us are not quite understanding that just yet. We're not quite understanding that. You make your wealth, guys, off of the discount days, right? The premium is going to come when you get to the end of the rainbow. That's when I want my premium paid to me. So if I could buy SPLG, if I can buy that sucker at $60 a share for the next 5 years, and then all of a sudden year 6, it goes to $75 a share. Year 7, it goes to $85 a share. Year 8, it goes to $100 a share. Year 9, it goes to $125 a share. Year 10, it's at $150 a share. So for those first 5 years, I bought at 60. That's where you build your wealth, in the red days. But you got to have a long-term outlook. Now, if you're in this thing where I'm going to stick it in today and I'm going to just get me a quick little flip, you get what you get. I don't know nothing about that. I don't know how to build wealth that way. Only way I know how to build wealth is put my money in the market 365 days a year and be patient. And give myself a 10-year window, a 5-year window, right? 10, 5, 15, 20-year window. That's the only way I know how to get wealthy. I've done it before. I've gotten my wealth through doing that exact thing I just told you. For 20 years in the stock market, I would invest every single month. I didn't care if it was a red day. I didn't care if it was a green day. All I knew was in 20 years, this is what I needed to be worth. Can I get that? Yeah. If you be patient, Richard, and you get an 8% rate of return on average over those 20 years, you'll have it. And guess what happened? That exact thing happened. Now I said to myself, I ain't got 20 years no more. I did my 20 years. I don't want no more 20 years. I need 10. Let me give me 10 more because I'm going to be running this YouTube channel for probably another 10 years. As long as the Lord keep me healthy and I'm happy doing it, I'm going to do it for 10 more years. So I want to work with my folks, my ride or dies. I want to work with the people that's rocking with me, and I want to go on this 10-year journey with them to build wealth. And I'm going to be riding it with them. Everything I learn, they going to learn. Everything I know, they going to know. Everything I buy, they going to know exactly what I buy. Doesn't mean they got to buy it, but they're going to know. Everything I know about crypto, I'm going to tell them. Everything I know about stocks, I'm going to tell them. Everything I know about our economy, I'm going to tell them. Everything I know about starting businesses, building businesses, scaling businesses, and then ultimately producing income from that business or selling that business, I'm going to tell them. That's my commitment to you guys. For the next 10 years, this is what I'm going to do. And I'm going to try to do it every day. Lord's will. If you want to rock with that, lock it in with a thumbs up. Help me out here, guys. Lock it in with a thumbs up if you appreciate that commitment to giving you guys the information that I believe can get you to your pot of gold at the end of the rainbow. If you're rocking with that, lock it in with a thumbs up. Also, in order for you to do that, guys, there's several things I want to quickly discuss, and then I'm gonna get on out of here. Number one is my Moo brokerage app that I'm using. Again, guys, that brokerage app is what I'm going to be using to buy these 3 big boy assets, blue chip assets, big boy blue chip assets. Appreciate the super chat, man. I appreciate you, man. Like I said, anybody want to donate to the cause, more than welcome to. You don't have to, but if you want to, again, I got to keep the lights on in the $1 trillion studio, and I got to be able to get access to the $1 trillion research lab. So any amount of money you can help, hit your boy with it. But again, you don't have to. It's not a requirement. I'm going to do this anyways, whether you donate to the $1 trillion research lab or to keep the lights on in the $1 trillion studio, I'm going to go ahead and be on here anyways. But back to what I was saying. So you got my brokerage app that I'm using, which is Moo, right? That's the one I'm going to use to buy my paper assets, to double my net worth over the next 10 years. Now, some of you guys already got brokerage apps. Some of you guys already got brokerage accounts. That's okay. Stick with what you got. Hey, if you want more than one and you want to rock with me, open the Moo account. No one says, there's no law that says I can only have one brokerage account. There's no law that says, oh, because I use this one, I can't use this one. Guys, I got 4 brokerage accounts, by the way. Just an FYI. I got 4 brokerage accounts that I use, and I use all of them. I'm just saying Moo is the one that I'm going to use every day. The other ones I don't use every day. But the Moo one I am. So all I'm telling you is if you want to rock with me and you want to be dialed in, you want to be laser focused in, and if you have a question about the Moo brokerage app and you got a resource, if you don't want to go to the app itself and go to customer service and you just got a quick question and you want to collapse timeframes, you can email me or DM me and I can help you out. But if you don't have Moo and you got some other brokerage, you call in, right? And then nothing wrong with that. That's fair, right? That's fair. But also, Moo is going to give you up to 5 free stocks when you put $100 to open that brokerage account. They're going to give you 15 free stocks when you put $1,000 when you open that brokerage account. Just a way of saying thank you for trying out our brokerage app. Now, this is a limited time offer. It ain't going to be there forever. So if you're inclined to give it a shot, whether you got no brokerage account or you got 5 brokerage accounts, I don't care how many brokerage accounts you got. You know, I don't care. It's up to you. My thing is I got 4, including my Moo, and I use them all. But I may be a little bit more, you know, I may be a little bit more seasoned in this than a lot of you guys. So if you want to rock with me and use the brokerage app I use, go down to the description box, click on that Moo link, open up your Moo account today, go get that free stock, and let's build some wealth. Next thing I want you to do is send me an email, let me know you opened it, and then I'll send you my wealth transfer blueprint video where I go over in detail the 3 big boy blue chip assets that I'm going to be buying for the next 10 years to double my net worth. I'm going to send you that. I'm going to send you that. Again, no charge for that. That's just free. And again, not trying to be your financial advisor. I'm just telling you what I'm buying. And if you want to copy that plan on your own free will, do that. I don't invest money for people. So you can't say, well, Richard, I want to copy the plan and here's $1,000. No, don't send me nothing. Because I don't. You got to do that. That's why I get that. That's why I'm telling you to get the Moo app so you can learn how. Right? I don't want to give you a fish. I want to teach you how to fish. Now, the third thing I'm gonna put out there is I did a Moo tutorial video. Some of you have already watched it. Of course, I didn't call it Moo tutorial video because y'all know how YouTube works. I didn't call it that. I called it something else because you know how YouTube works. You know how people work. YouTube, not YouTube, but people. You know, they see and go crazy. Don't even look at the video and find out what's going on, right? So I didn't title it that. Titled it something else. Video did okay. But I have that video for those of you who don't know how to use the Moo app and you really are not comfortable trying to move around the app and find stuff because you're just not comfortable with all the little radio buttons. You're not comfortable where to go. Then I can send you that video that walks you through the Moo app, step by step. It's about a 17-minute video, but I cover pretty much a lot of ground. Now, I'm no expert with the Moo app. I'm still not. The Moo app itself is the expert. There are tutorials in there. There is information, but you got to figure out how to find it. See, that's the key. You got to know how to find that information, and that's where my video helps you do. So if you want that video, all you got to do is say, hey, Richard, I opened my Moo account. I made a deposit. I'm ready to build wealth. Send me your wealth transfer video, the 3 big boy assets you're buying, big boy blue chip, and then send me the tutorial video. I'll send you both of them. And at that point, it's on you. All you got to do then is just turn on the faucet. Start putting money in there every single month. Dollar cost averaging in. Remember, I got to be in the market 365 days a year because I don't know when the rocket ship is going to take off. I don't know. I have no idea when the rocket ship is taking off. I have no idea when the stock market is going to want to have a really great day. That's why I got to be in the market every day, so I don't miss any of those days. Maybe I get 10 of those days a year. Maybe I get 10 days a year where the stock market is just really going to be exploding. But if I'm not in the market constantly every month putting more money in, then I miss those days. Right? So I can't time the market. I just got to be in the market. Right? I got to be in the market every single month through dollar cost averaging. And I got to commit to doing that for 10 years. I don't care how old are you. I'm 56. I committed to it for 10 years. So if you want to build wealth, make a commitment. Make a commitment to you and your family. Not to me, but to you and your family. Because that's what matters. I've already made my commitment to me and my family. I already told my family for the next 10 years, I'm grinding. Well, Dad, why are you grinding so hard? Because I want me a little piece of land in the Caribbean Ocean, or the Caribbean Ocean, however you pronounce it, on a deserted island somewhere with like 5 people on the island. I don't need no commercial island with all these tourists coming. I don't want that piece of dirt and water. I want one where there's none but locals. And I can buy me a little piece of that land. Walk out my back door to my little modest little place I'm gonna build. I'm gonna build me a modest little house, and I'm gonna walk out that backyard. I don't need no pool, because when I walk out my backyard, it's gonna be the ocean. That's the ocean. That's my pool. I don't need no pool. That's the pool, that ocean. So when I walk out the back door, I want to have me a little patio area, and I want to see nothing but blue water. That's what I want. That's my pot of gold. That's what my pot of gold at the end of the rainbow gonna give me. Peace of mind, solitude, fresh air, coconuts. I guess coconuts grow in the Caribbean. I'm assuming they do. And just relaxation. And hopefully they got some internet so that I can do me some live streams and keep up with you guys. But that's my end result. And then obviously my end result is to leave a legacy for my kids, a financial legacy, right? I want to leave a financial legacy for my children. So I'm going to run hard for these next 10 years because that's what's most important to me. My golden years and leaving my kids a financial legacy. That's it. If I can do those two things, I can leave this place and rest. That's how it is, man. What are you looking to do? What are you looking to do? And what you're doing today, will it get you there? That's the question you got to ask yourself, guys. What I'm doing today, is it going to get me to the pot of gold at the end of the rainbow? Will it? Will it get you there? If it will, keep doing what you're doing. If it won't, you got to change some things. And I just walked you through some things you can change. I just gave you some information that you can use to better your situation in your life and figure out what's more important to you. What's more important to you? Living a situation where everything you do is instant gratification, or disciplining yourself, realigning your priorities, introducing some financial tools into your life that will discipline you, make you more consistent, give you a level of patience, and then you go build wealth. I don't know. You got to figure out what's important to you. You got to figure that out. What I'm going to tell you, though, is if you keep doing what you're doing today, you're going to get the same results you have been getting. You got to change your activities if you expect different results. You got to change your activities, guys, if you expect different results. I know some of you guys want to have everything you want. Whatever it is. I don't know what it is. Everybody got different things, right? I know some of us in this world are going to grab a hold to our destiny and get there. And then we're going to have others in our world who will continue to stay where they are. They'll continue to just be who they are because they can't help it. See, most times when people are attacking someone or picking on someone or trying to disrupt something, they have a real problem with themselves. They do. But they don't want to face their own problems. So what do? They try to push that energy off on somebody else so that they can not have to think about it and worry about where they're at. So anytime I see negative, whether it be in my chats, whether it be in the comment section of the videos, anytime I see that stuff, I know what it is. That's somebody who's insecure with who they are. That's somebody who is in pain. They're struggling in their own mess, but they don't know how to get out of it. So what they do is to make themselves feel better, they try to attack someone else. It's sad. It's sad. It's sad, man. It's sad when you see people who are in pain like that. And that's one of the reasons why I try to do this channel and give my opinion, because I know what's going on. I know when people come at you sideways, and especially when you're trying to help somebody, they still try to come at you sideways. That's just they're in pain, man. And they don't know how to get out of it. And the only way they know how to deal with it is to lash out at other people. That's how it is. That's life. But we got to deal with that. And what we have to do is we have to not worry about that. We have to focus on the things that we can control. I can't control someone else's attitude, but I certainly can control my attitude. Right? I can't control someone else's effort, but I can control my effort. So those two things, that's what I focus on. I focus on my attitude every day, and I focus on my effort every day. And when I look in that mirror at night, when I'm getting ready to go to bed, I brush my teeth, get myself ready for bed. I look in that mirror, and as long as I can say to myself, Richard, well, how was your effort today? How was your attitude today? And I got to admit, guys, I can't every night before I close my eyes, I can't I can't say that every day I'm winning that battle. Some days I lose. Some days I lose. Some days I lose because it's some areas of my life I'm still impatient. I'm still impatient in some areas of my life, and I'm working on that. I gotta have my life has to be all well-rounded. It has to be patient, and there are areas in my life that I'm still impatient. So I'm working on that. So every day I can't say I'm better that day than I was yesterday, but the goal is to be better today than I was yesterday. That's the goal. That's what I strive for. Do I always make it? No. But I'm not going to beat myself up over it. I'm going to recognize that I did not do what I wanted to do today. I'm going to recognize that. And I'm also going to recognize that was my fault. I'm not going to blame anybody else for, oh, I fell short today because my lawn guy, he didn't show up today, so it made me mad. No, I'm not going to blame anybody else. I didn't do what I needed to do today because that was on me. It was on me. That was on me. I was impatient today when I was driving. That wasn't because somebody cut me off. I was impatient because that was on me. So we got to control what we can control, guys. We can't worry about what outside noise says. Control what you can control. It starts up here. Get this attitude right. Keep yourself right. Keep yourself in good mental shape. Keep yourself in good physical shape. Keep yourself in good spiritual shape. Keep yourself in good relationship shape. And then keep yourself good, what? Financial shape. Those are the 5 things you need to stick to. If you do that, you give yourself a chance to win and win big. Well, I appreciate you guys. Thank you for locking in. Thank you for tapping in. Thank y'all for supporting me all these years. Thank you so much for the folks that did the super chat. Hey man, I appreciate it. It will help keep the lights on at the $1 trillion research lab, and it'll help keep the lights on at the $1 trillion studio. So I appreciate you. Appreciate you very much. Y'all know I'll be back tomorrow on Saturday with another one, 10:30. So if you can rock with me on tomorrow at 10:30 a.m. Eastern time, be here. We're going to have some more stuff we're going to talk about. We'll wrap up the week, talk about a few other things. But I hope these types of live streams are helpful and it gives you some better insight to what's happening in our financial markets, what's happening in our economy, what's happening in our housing market, what's happening in the crypto market. And again, guys, all my opinion. You don't have to believe it. You don't have to rock with it. But it's my opinion, and I'm going to be on here every day giving it to you. So lock it in with a thumbs up before you get out of here. I appreciate y'all. Y'all have a wonderful rest of your Friday. Go out and do something magnificent today. Go out and do something magnificent today. Go out and do something magnificent today, guys. You're magnificent. Go out and show the world how magnificent you are. Because you are. There is nobody in this world like you. You're the only one that makes you magnificent. That makes you special. There is nobody like you in this world. Keep that close to your heart, man. Whichever side your heart on. I ain't really good with anatomy, but it's somewhere up here. Keep it close. There's no one like you. You're unique. That's a special thing, and you should celebrate it. Appreciate y'all, man. Lock it in with a thumbs up before you get out of here. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'm going to see you guys on the next one. Peace.